gold. It's absolutely ripping right now. Very exciting.
I love gold.
Bitcoin, not so much recently, but gold is at new all-time highs. 1 ounce of the yellow stuff is now over 3,000 US dollars at the time I'm recording this video, which is a new all-time high. Peter Schiff was right all along. Well, look, over the last few weeks, there's been a lot of conversation across social media that gold's move into new all-time highs is actually really good for Bitcoin's future price because Bitcoin tends to lag behind gold just by a few months. The basic idea is that gold and Bitcoin are heavily correlated, but with a lag. Gold reacts quicker to macroeconomic things like the global M2 supply increases, faster than Bitcoin anyway. So gold's price is therefore a leading indicator to Bitcoin's price, a canary in the coal mine, if you will. So are these claims correct? Will we soon see Bitcoin follow gold's lead into a new all-time high? Or is all this just copium? We just can't deal with reality, man. Gold's pumping because of macroeconomic uncertainty, and Bitcoin trades more like a tech stock, goes risk off. We are just deluding ourselves with massage charts and data, seeing what we want to see. Honest question. So today, let's take a critical look at the correlation between Bitcoin and gold, look at how M2 factors in with all this, and what it all means for Bitcoin's future price. So starting with the basics, gold has been the go-to savings asset for centuries. We like the yellow metal. When there's fears of inflation, currency dips, global uncertainty, investors have historically run to gold as their safe haven. Bitcoin is a newer, riskier bet on that same idea just for the digital age, and it tends to trade more in line with major tech stocks versus how gold usually trades. I know we talk about it as a digital store of value, but it's a very volatile one. But it all ties in with the global M2, which is the total amount of central bank fiat that's sloshing around in the world. Now, gold and Bitcoin are positively correlated with M2, so when M2 increases or decreases, the prices of gold and Bitcoin tend to increase or decrease as well, respectively. So staying with the big picture here, as you can see here, the US M2 increased about 40% from 2020 to 2022 as the Fed increased the money supply in a very dramatic fashion to keep the economy moving during the COVID crisis. US M2 then decreased by about 5% and bottomed out during the fall of 2023. And it's since then that we've seen it return to previous all-time highs. Once again, pumping. So we had a major high in December, and now we're pumping again into new highs. Now here's gold against the US M2, and here's Bitcoin added on. Just from a glance, you can see how all these assets rise and fall together. But just to drill it in a bit, the statistical evidence says that Bitcoin has a relatively high correlation with M2, while gold has a more moderate correlation with M2. So basically, when central banks print money, both gold and Bitcoin ride the wave. Bitcoin just rides it harder. There's more volatility to Bitcoin. I know gold's been doing well recently, but Bitcoin tends to outperform gold dramatically year over year. Having said all of that, we haven't gotten to our central question yet. If M2 lifts up both, is gold acting as that canary in the, well, gold mine, right now by catching up the wave? First, before we get into answering that question, I want to take a moment to let you know how you can get $50 for free with Femex, one of the top crypto exchanges. Look, markets go up, markets go down, but you can trade both ways and make money both ways. Even if it feels a bit dirty making money shorting sometimes. And the OG exchange, Femex, is a great place to do it. It's available to everyone, everywhere. It has deep liquidity, all the top trading pairs, and currently they're running a crazy promotion that you may want to take advantage of. So you get $50 for free just for signing up using the link down below. You'll get a 20% deposit bonus. So you deposit $1,000, get $200 back, as well as a $1,000 trading bonus. Pretty damn cool, right? All you have to do, use the link down below to start your account, and you'll be eligible for all of those bonuses. Go check it out if you're a trader and you want to be trading in the markets and taking advantage of that offer, but also of all the trading opportunities available. Let's get back to answering this question. Is it the canary in the gold mine? Look, we're asking this question now because gold has been making those sweet all-time highs while Bitcoin's been taking a big fat stinking dump. Okay, so let's try to tackle this question. First off, let's compare how both assets reacted whenever the central banks began to really slam the fiat pedal at the start of COVID. So we're going to focus in on the price action and the timing for this specific area of the chart. So measured from the COVID crash of March 2020 to each asset's new all-time high, you can see that gold led Bitcoin. Specifically, it took gold 5 months to make a new all-time high. Well, it took Bitcoin 13 or 20 months to make new highs, depending on which of the peaks you really want to measure from, whether April or October. But anyway, without a doubt, gold led in 2020. But what if we focus on the chart from where USM2 bottomed out in September of 2023 until now? Will we find the same data? Well, if we do that, then what we find is actually a much more nuanced picture. Clearly, the two assets are moving upwards together. Okay? That's obvious from the charts. But there's times when Bitcoin makes the first move. Other times when gold makes the first move. It's an interesting little ballet of stores of value. This last detail aligns with historical data, which shows that these two assets have a pretty weak correlation at around 0.1 to 0.15 over the long term. But in the short term, it's kind of all over the place, to be honest. Some months, gold and Bitcoin will hit correlative spikes at 0.5. Other times, it drops dramatically down into the negatives. So they don't always move in sync. You'll find much better correlations between Bitcoin and the NASDAQ 100, for example. So to be honest, we're seeing gold now working as a leading indicator. As an idea, seems to be more like a coin toss, to be honest, rather than a real solid signal. And while some of the charts shared across social media do look pretty persuasive, and there are times of increased correlation without a doubt, I don't think it's something I'm going to be banking my future on as a thesis here. Bitcoin going up solely on the theory that gold is a leading indicator. It's complicated. I just don't find the data particularly compelling, not as compelling as Bitcoin versus the global M2 supply. Having said that, given that Bitcoin and gold do generally have a positive correlation, then we can absolutely say that, look, gold breaking into a new all-time high, it's definitely not a bad thing for Bitcoin's future price. If you can create enough narrative of Bitcoin, digital gold kind of stuff, going to follow the narrative, follow the price, okay, sure. So that's where I'm at with this question right now. Now, does this mean that I think Bitcoin won't make a new all-time high in 2025? No, it doesn't. I'm still on the new high in 2025 train, okay? Because even though gold might not provide us with the best signal, I think global M2 does.
Lark's talking about the global M2 again. Sheila, get the kids. The internet man's on the global M2.
Lucky for us, global M2 just printed a new all-time high. It's good news for risk assets. That's at 108.2 trillion. And while it's projected to increase another 11% this year to $120 trillion. Now, this increase will primarily come from China's continued QE program, along with the US phasing out their QT program. We also have Germany and a whole bunch of other central banks out there printing hard. Interest rates getting cut globally. Therefore, global M2 is Bitcoin's real signal. So given that M2 should increase another 11% this year, and then factoring in Bitcoin's high correlation with it and even higher beta to it, what's more reasonable? That Bitcoin peaked 2 months ago and will continue to range sideways and down, and it's a new bear market and it's all fucking over, or that we're going to, as we do 83% plus of the time, correlate with M2 and go higher. Probably, this is just a normal correction. Gross scare in the US, all that kind of stuff, and Bitcoin's gonna rip to new all-time highs along with global M2. Could start as soon as the end of April, might take into May or June, but we're gonna start trending up at some point. Okay, as long as there's no big black swan that ends the world financially, obviously, then we're probably gonna see some pretty good price action. Gold, it's not really our canary in the gold mine, but M2, that's the signal to watch, guys. Thanks for watching.